Hey traders, no intro music today. We're getting right into the show. Welcome, welcome. Thanks so much for being here for Charts and Coffee. Happy Wednesday, everybody. Hope everyone's doing well and keeping their eye on the couple things. One, the economic calendar. Two economic calendars, really, we've got to start keeping an eye on as we go into the second week of October. I mean, obviously, we've got non-farm payroll at the end of this week. We already had JOLTS. We saw what JOLTS did to the market in terms of that job openings number being much, quote unquote, better, right? There were more job openings. That's considered good news. And we are still in a good news is bad for the stock market, right? Because what does it tell the Federal Reserve? If the Federal Reserve monetary policy is not breaking the economy, if it's not damaging jobs, and if it's not sending inflation too high, right, then that is a green light to keep on with not hiking, because that's probably done. I say probably because there's still a little bit of a chance that maybe we see a hike in December. Not likely, but possible, right? Probable is still the hold. But so then, Rod, what's the problem? Macroeconomically, gang, what I mean by that is a rate of change study of jobs, growth, and of course, inflation. Growth is probably the least important of those because this Federal Reserve has chosen to sort of redefine what a recession really is. So let's move growth and the recession issues aside. Notice how that doesn't really come up anymore because none of us really know what Jerome Powell and company think a recession is. Okay, so that brings us to jobs. The Federal Reserve has a dual mandate. Jobs, they can't hurt those. They've got to help promote jobs and wage growth, wage inflation to a degree, and then, of course, inflation. So when we have the Federal Reserve thinking, well, we're not breaking the economy, look at the JOLTS numbers. They're going to keep rates higher for longer. Stock market's not going to like that. So that's that continual pressure. Now, when I take a look at the yields this morning, when bonds are going lower, yields are going higher. So remember that anytime you're looking at TLT, GLD, ZB, GC, right? Those are especially very sensitive to yield. Those two markets are very sensitive to yields. When gold is going higher, that means real yields are coming down. And when bonds are moving higher, that means also yields are coming down. And we see a little bit of a, obviously, intraday bounce in bonds. Does this mean we're up and away from here? Oh, gosh, not even close. It just means this morning we'll likely have a little bit of a bounce on our hands. For those of you that are wondering, okay, Rog, how are you positioned for this? Because look, I don't want to sit here and have analysis. No one needs that. If you want analysis with no backing, watch television. You can do that all day, every day. What I'm going to tell you is what I've done is I've positioned my Sector Secrets Mastery folks long Amazon. So we're going to wake up this morning with a long position in Amazon. And actually, I'll even show you what we did. Because to me, my job is to talk my book. I don't think there's anything wrong with a trader or an investor. It's sometimes looked down upon. For those of you that don't know the jargon, talk my book means, you'll hear it often with this kind of slant. Oh, they're just talking their book, meaning they're just talking up their positions or talking up the things they have. Every hedgie does this. On the rare occasion, they have an extended visit, an interview on CNBC, they just talk about the things they have. Of course they would. And I respect that because they're talking about the things they've actually entered, right? Not what they think is going to happen, not targets. This is what I'm in and this is why I'm in it, right? So I like talking your book. I think that's the only thing that matters in modern day markets. So I'll show you right now. Let's see, Tuesday, short-term swings. There it is. This was the setup right in here. I'll make that nice and big for everyone to see. This is what we did. We bought the 13 October Amazon 124 calls when price sunk into 125.05. The whole point was to see price sink into the daily price movement range on the 1 hour chart. So those are with DPMRs or even the daily or the 1 hour with those DPMRs, we sunk into that range and we want to take a profit when we get to 126.78. So this is not a position I would say you get into now. This is what I got into yesterday at the 125 handle. And I'm looking to get out as we get closer to the one, as you can see right there, 27 handle, just shy of that. And If we can see some decent follow through, that's exactly what I'm looking for. Will I hit that target necessarily this morning? Don't know, right? It was looking better a little bit earlier, but we'll stay vigilant about this. And maybe, as uncertain as things are, I might just reel into a break even. So these are the kind of things that we'll do in the mastery. So we saw the move yesterday, took a relative outperformer. I didn't buy the NASDAQ, right? Why didn't I buy the NASDAQ? I didn't actually tag in a way that I felt comfortable the daily price movement range. It was a very, very outsized move in relation to the historical volatility, right? So I did not take NAS. I don't like actually consumer discretionary as a whole, but I like Amazon's outperformance, right? So that's what we did. So I think that's a really big distinction. What are you actually in, Rog? Not what do you think the market's going to do? What are you actually in? And the rest of the time, I'd say 90% of the time, we are still focusing on the day trades. Yesterday, again, let's just talk the book. What did we do yesterday? Not what I saw, not what I thought. What did we do? Yesterday, it was tough. I think jolts made the morning pretty frustrating. We don't have any such problem today where we have a major job or major inflation number sitting on the calendar. We only have the ISM services PMI, which is an important number. It's more on the inflation side of things, but it's not a jolt. It's not a PCE, CPI, non-farm-esque impact, right, on macroeconomic rate of change. So what I have here is ISM, which will be much easier today. Yesterday we had jolts. We took shorts in the Russell, or I should say long puts on the IWM, and we got long puts on the KRE. That was the plan. Red underlying market trend, very weak open, and we just took advantage of the weakness. And that was yesterday's. So today we're waking up to a very different morning, aren't we? Right? And this is why day trading's been so great, because every morning it seems that we're dealing with a brand new mood, a brand new news cycle, a brand new everything. And the best way to deal with today is today trading, right? What can I do between 9:30 and about 3:50 p.m. Eastern? I want to be out by the Fed candle, as it's known, 10 minutes before the bell, where some real craziness can take place. So that's my window, right? But most of what we're going to do, I'm not day trading all day. I don't have the stamina for that anymore. I really don't. Once upon a time I did. And then I started to look back and say, gosh, Rog, you're actually doing better. You're happier. You're healthier by focusing on about an hour, maybe two a day, not all day long. So less is more. And when I say less, I'm talking about setting up, for example, those two trades in the first 65 minutes of the day, right? Sometimes they follow through. Sometimes we hit our target and we're break even stopped, and that's the end of that ride. It just really depends. And I know my mastery folks, you know exactly what we're talking about, but I want everyone to, ultimately think about, hey, how is it that I'm structuring my trading life? And am I doing it in a way that is serving me best, right? And I don't just mean, you have to be in front of the computer all day. I actually don't think that is I don't think that's an effective way. I go back to minimum effective dose, right? Who here is a Tim Ferriss fan? 4-hour work week. That's what it was all about. How can I make the most of a minimum effective dose? And I think a lot of traders would benefit from that with their indicators, with their strategies, and even their time spent in front of the charts. All right. So with that being said, gang, let's go ahead and jump into, as always, the best part of our show. Let's get to the questions, and bear with me here. Move these so I can see them. All right. So first up is, let's see, D. Bolton, OPEC. Yes. So we really liked crude oil and oil stocks. They've been very good to us for a very long time. And as we, hi, puppy, pups. As we take a look at the green uptrend on the daily time frame, this is the chart to the right. There we go. Sinking into the daily price movement range. The timing might be best. Yeah, the timing might be best. So I think it makes sense that we're going to presume, and that's what the data shows, that the supply cuts are going to stay in place. It's tough to bet against an uptrend. I'm certainly not looking to short this on the longer term. So would love to keep an eye on a pullback buy on crude oil. Maybe have something like XLE, OIH, XOP coattail that move, right? So yeah, definitely something we're going to keep an eye on. All right. Relief mentions oversold equity markets expecting major spike high today. I have no idea, my friend. I try not to tell the future. Pretty sure my flux capacitor in the DeLorean has been broken for all 30 plus years of my career. I don't know. I have no clue what's going to happen. And here's my thing, Relief. If anyone were to answer that question, my gosh, how do they know? Don't know. I don't have a magical indicator that's going to tell me where we're going to go. However, if we have strength in the NASDAQ, if the sectors of that index are all firing to the upside, XLK, XLC, XLY, it's going to make sense for me to look for higher highs, as long as we can maintain that structure. I didn't know that the Russell was going to have one of those days, right? I don't credit myself with being a brilliant trader when the candle is, 2 inches tall on my screen. What I say is, good job on entering and great job on scaling out and letting the market do its thing. So let's see if that may not happen to the upside today. I'm sure rooting for that in Amazon, clearly. And I'd like to have some day trades, possibly to the upside if that's where we are as the morning progresses. All right. I appreciate everyone's questions and comments. I think the most important thing is to remind everybody in trading, we don't know what's going to happen, right? And when we think about what could possibly happen and what will probably happen, probabilities lie best in trends. That could be the macroeconomic trend, that could be the trend of a chart, but then the chart has to be specific to the time frame. You notice that I don't use multiple time frame confirmation. I'm either day trading a 5, or I'm short-term swing trading a 60, or I'm slightly longer-term swing trading a daily. Every time frame has a job. Their job is not to agree with one another, right? Too many cooks in the kitchen spoil the stew. I think that's very true. So if we can find the time horizon, Rag, I don't want to be exposed to the uncertainty of overnight. Cool. Shorten the time frame, get flat by the end of the day. Rag, I'm okay with a little bit more wiggle and wobble in the market. I want those longer-term moves. We've got to commit to a longer term time frame, commit to a longer term time horizon, right? So that's where we manage that whole balance of risk and reward of time frame and time horizon expectations. So I hope that makes sense. All right. Rainy Day says Pareto. Yes, absolutely. Absolutely. And I'll even go a little further. Rainy Day is one of the, I don't know if y'all can see that in the view. One of the books on my shelf is written by a buddy of mine, Dr. Ben Hardy, and he wrote a book called 10, I'm going to read it so I don't screw up the title. 10x is easier than 2x. And the whole point of that book was he was inspired by seeing Michelangelo David, and the quote that I'm going to completely screw up here, which was, how did you create the David? I chipped away until all that was left was David, right? And so we have to ask ourselves, can we chip away from things till all that's left is the 20% of things that we do that create 80% of the results. It's amazing to me how much we tend to do this. I don't know what it is. I'm no psychologist. But although I did double major. I'm an English and psychology major. That said, I'm no psychologist. But for whatever reason, the brain loves the minutia. We love to harp on the things that we really have no data as to whether or not they're needle movers or not, right? So when I look at my charts, every single thing on that chart right now is a needle mover. And if I don't want the information on this layout, kind of going back to Pareto, Rag, I have a lot of indicators. You're telling me I shouldn't use them all? Here's a really great thought. We do this in the mastery. Group them. Here's my volume layout. This is a completely different job. This job is, what is the importance of volume? If you want to know what money is doing, if you want to follow the supply and demand of the market, you follow volume. You don't follow price, right? Volume is size. And volume is really, I would say, the second most important factor of the 4 to price. What are the 4 factors? Price, volume, volatility, time. I'd say the second most important is volume. So I have a kit of indicators dedicated to price-based volume. But do I always need that there? No, I'll refer to it as I need it. So if you've never thought about keeping a group of indicators that are designed to do a specific job in your layout, try it, because this is where you could say, okay, I need a volatility and price-based outlook. I need a volume-based outlook, and you can toggle between different layouts. Listen to me now, believe me later, it will make a sea change in your trading. All right. And yes, rainy days, definitely the Pareto principle. What are the 20% of things that are making the 80% difference in your trading? Can we take a look at the RTY? Of course. So Russell this morning, two things when it comes to the RTY. Number one, is it in an uptrend? Yes, it's wobbling a bit, which probably means I'll see a bit of a wobble also in the Dow. One of the best things to do when you're looking at the RTY, Mimi, is not only keep an eye on the RTY itself, keep an eye on, in tandem, XLF and KRE. The number one weighted sector in the Dow are financials. The number one weighted sector in the small cap, the Russell, is regional banks. All right. So definitely keep an eye on the overall regional bank trend, because that is going to drag on the Russell. All right. Let's see. All right, I appreciate that, Darren. Thank you. Thank you. Thank you. All right, let's see what we've got here. Bear with me. It in the questions? Okay, cool. So I think we caught up on the questions here. Wow, I almost never do that. All right, so let's take a look at what's going on with the S&P. For those of you that haven't yet, I have the S&P Darvis video at the Simpler Trading YouTube channel. If you haven't checked it out already, SPX and Darvis, two very important questions I get, because a lot of folks ask, Rog, do you trade the SPX? I actually don't. But is there a way to trade every variation of the S&P using ES? In fact, not only is there a way, it is the way, right? This is the way. S&P Alorian. Looking at the 23-hour version of the ES is going to give me insight into the SPY. It's going to give me insight into the SPX. But let me tell you, here's the gadget most SPX traders won't ever use. They don't know. The number one weighted sector in the S&P is XLK. But the number 2 and 3 are financials and healthcare. If you want to know where the S&P is going, look at the 23-hour version of it, S&P futures. Then go take a look at the financials and healthcare. When you've got clarity, preferably on all three cylinders, tech, financials, healthcare, SPY, SPX, those are going to be far better to see follow through in. Build the pieces up from a more complete view, and then whatever version, even micro S&P, they're going to be much, much clearer when you put that chart on your screen, because now it's almost like X-ray vision. You can see what's going on inside that S&P. All right, gang, that's a wrap. I will see you all tomorrow, same time, same station. Be good to each other. And heads up for that ISM at 10 a.m.